let's talk about news because it's coming in 10 minutes. This is how we're going to trade news really quick in the next 10 minutes is again, please trade news in a demo account. If you are not familiar with this strategy, this technique, or you just if it's the first time that you're trading with us, please do it in a demo account. I can't stress that enough, only because it's news. And news can do whatever it wants, whenever it wants, and it will ignore all price action behavior. So that's the number one thing you guys need to know when trading news is it can and will ignore anything that has to do with price action, right? Because it's news. It's based upon the event when news comes out, right? This is how I trade it. This is how I'm going to trade it. So I'm going to give you a precursor is that if there's a baseline here and it's doing this, we wait for the pop. As soon as the pop comes in, I fade that pop to 50%. Or if it comes and starts wobble, if it starts like wicking out, whenever it starts to wick out, I get out, right? When it wicks out, I get out of that initial burst, right back to 50%. That's usually what I'm hunting for. But I probably will do a couple smack of Brandons here on this, and then I wait for the first initial pullback and I get out. Now, also be careful because sometimes during news, it's very, very difficult to have good execution. So that's why I'm saying demo account if you never did this, because brokers like to mess with your execution during news, right? Where sometimes you just can't trade. So this is kind of phase one of news. So the next phase two of news after you get this initial pop is you wait and you see is if it's fading here, is it going to have continuation in the direction that it first popped, or is it going to retrace back to 100%, right? If it's going to have continuation, it will fail to 50%. It will fail to 50% if it's going to have continuation, right? So if it fails the 50%, then phase two is I'm probably getting back in here into sells or the direction of continuation. And I'm not getting in heavy. I'm just getting into a normal position size because if it does come back to 100%, then I'm going to get in sells here again, moving my break even to 50% of this move right here. But if it adds continuation and it crosses this point where it was, comes down, comes back, I add more to my position here as we'll see a continuation. So that's two. The third, so there's one, two, threes of trading. The third piece that I do is as soon as all of this exits the playing field or whatever, the market, and we got one and two is done, then the third is I bring the fib. Then I fib this entire move on the news and I fib it with the fib levels. So the 20, the 30, the 50, the 60, the 70, and the 100. So I just fib this back and I'll either add at these points or I'll depending on what price does, if it blows past it, I'll secure. If it bounces, I'll add some more, closes, I'll secure. So that's how I typically will trade the news. The one, two, threes of news trading. Again, first fade, initial drop in that direction. I fade it. Second phase is I wait and see if we're going to get continuation or if it's going to have a pullback to 100% and go the other direction. And then the third is I wait until it's kind of calm, the seas are calm, and then I fib that news event. And that's how I do the news. Like I said, there's a lot of moving parts and it's really, really quick action. So you gotta be ready. I only do this when it's red, right? When it's a red event. I could care less if it's a non-red, I'll just trade it like normal. But when it's a red event, this is kind of how I usually do it. And other major events like non-farm and FOMC, definitely doing it this way, right? All right. So that,
Question.
yeah.
Um, how do you know when the first burst has stopped? Because many times it's pausing, looks kind of like it's turning, and then that becomes a new 50 and it keeps going, and then only like 2, 3 minutes later is when it stopped.
Yeah, so that's a great question. And that's why I start with zero and try to go flat before news. And if it comes down and this is the first, this is the burst on the downtrend and it kind of stalls here and does this, and then it has continuation right there. Yeah, that's something the news can do. Like I said, first and foremost, doesn't adhere to any sort of, you can try and have a system, but news doesn't always. And then what he's saying is that a lot of times this now becomes 50%. And sometimes news will do that where it'll just kind of meander here and not give you enough to get out and or make profit. And then you'll take these into losses, but you need to wait. You have trades here. You do not put trades here to here. You wait until this becomes 50%. Then you add enough trades, put your break even here, and then get out on the retracement or buy back in to the 50% because that's where it's going to go. Right. So this is really crucial that you don't smack in so heavy that this becomes risk out. And that's the pitfall of news, is that becomes risk out. So yep, there's our burst. We'll go ahead and sell that. Get into a few cells there. We'll wait for it to come to shoot back. And put probably 10 on because it's flickering. And the pullback to 50%. You see how it's fighting right now. It really is fighting, but I'm on the other side of this. Is usually just a quick little grab, and I'll close those trades right there because I was on the other side of break even. Now, is it going to have continuation and move forward, or is it going to retrace and come all the way back down? We don't know, so it's fighting that. You can see it's fighting buyers, sellers, buyers, sellers, buyers, sellers. We're fighting. This is a really difficult phase to trade in because you don't know what direction it's going to blast. Now, if you are participating with the news, Doug probably knows right now that if this was good for the dollar or bad for the dollar, if you're listening, it can kind of give you a insight as to which direction the market should go if it's good or bad for the dollar, right? So I'm kind of at this point, that initial burst is over. We're kind of starting to move into phase two and seeing what news is going to do. It's come down 100%, right? From where the pop was, it came all the way back 100%. So normally when it does do, I shouldn't say normally, but there's a chance that it could just completely go the other way. Thank you, Jerry. He says strong for the dollar. So I'll probably look for a pullback and start to get into some sells, right? Just a little bit of a pullback. There we go. Now I'm here. The positions that I'm taking are going to be normal and light, not heavy, just normal and light. And I'm going to manage my break even, meaning I'm only going to take like 1 or 2 trades at certain levels because during news events, it's not uncommon to get a 10, 20, 30 pip run. And you don't need 10 trades if you're going to catch a run for 30 pips. Instead of maxing out on short amount returns, we're going to go for longer runs by staying light. And so for those of you guys who are new to trading, Jerry, if you wouldn't mind answering this question, what does it mean when the news is strong for the dollar? What in this pair, the Euro USD, how does that help you to know which direction to trade?
Yeah, if it's strong for the dollar, then on this particular pair, we should see the Euro USD go down.
Yes. So you should be selling if it's strong for the dollar.
Correct.
Right?
Correct.
Yep.
Correct.
And getting that little pump up. Okay. So now everybody's kind of the news, the news to sink in. Everybody's learned it, digested it, and now we're like, okay, are we what's going to happen here, right? And unfortunately, because of the wickiness of all of this, we may not get the third phase, which is the fib phase. And again, watch your spread, because even though this is your break-even line, if you close out here, you could be within spread, which is taking a loss. So watch your spread.
And I'll also say this news event is kind of one of those secondary events, because interest rate events are more volatile. So this was consumer sentiment. So it didn't really have to do much with what the Fed watches, like employment or inflation, that kind of thing. But it still is positive for the dollar.
So as soon as we get a blue candle, I am probably going to secure these trades. And unless it's like that, I may secure A. And now securing is kind of tricky because it's so wicky. I'm probably going to get wicked out, but I'm at a point right now where I don't want to go heavier than 10 trades. So I'm all right to get wicked out or hit my goal, right? So either do one of the two things and I'm okay with that decision, right? However, if this is max profit, I'm probably going to do that. And it just took me out.
So this one's interesting. And what you were saying is right, because it was fairly hawkish, but then it kind of went against expectations and it shot upward on the spike.
Mm-hmm.
And that's interesting. It's a reversal of what you would logically expect it to do.
Right. But
in cases like that, it can be a really good fade opportunity like you're seeing here. If you went short on that top, you're probably happy now.
The number one rule of news trading is expect the unexpected.
Oh, sure. Yeah. But in this case, it looks more like a good fade opportunity, because the signal is to go south, but it pops north. So you kind of hover over the mouse for a second, thinking like, the fundamental signal is to go short, and then it pops north. You can guess like, ooh, is this a good time to smack it in short?
Just smack in.
And here it would have been, you see. Like you'd be in solid profit right now.
So I get the
hard to predict Alfred, that though, so I don't want to say
what Alfred is saying. Yeah, that University of Michigan is a non-event, right? But it does cause this behavior of the market. It's a sporadic, erratic behavior.
Mm-hmm.
And sometimes it might not even be worth trading the news event, but I was just, for today's purposes of just showing you how I do it, this is how I do it all the time, right? So
yeah. Plus, if everybody's eyes are peeled because they're paying attention to the World Economic Forum, then a little event like the University of Michigan can get more attention.
Right.
Because everyone wants to hear if the WEF is going to do something.
Putting trades on. What I'm doing at this moment is now I'm trying to see, now I'm trading. Only got 5 trades on. Now I'm trying to see if we're going to go back to normal price behavior for a bit, right? Which is the 50%. So, and the fibbing of, ran up, came back down, hit the 50. Are we going to come up and hit the 50 of here? And that's why I'm in buys right now to come up to this point, which is the 50% of this move, right? I'm only into a few buys because it could reach and make this the 50%, right? If it breaks this, we could run all the way down to there. So, however, I think our spread should be back to normal. Everything's okay to trade. It's not considered news trading anymore. It's by prop firm companies. So I should be able to start to secure my trades, all that kind of stuff. And I will do so if the market crosses that. Failure to cross that, I'm just going to close out for a recycle event, which could have done on that first candle. Which I probably should have done again, just because we're getting some big wicks coming in, but you got wicks on both sides. But it's still kind of making that decision. So the best just to stay light right here until the decision is made, or pop off just some quick profit, take profits. So who hit goal already off this news pop?
People do good on that?
He got goal. Dennis, Spicy Nick. Pretty close. Yeah, got pretty close too. Good job, guys. Excellent. So in my mind, I'm like, when are we going to be done? When is the market going to be done trading for the day? Right. And when that happens, it means that we're getting less than 5 pips in price cycle.
Mm-hmm.
We start getting less than 5 pips in price cycle, it's just not worth trading, right?
You're looking at about 50 minutes.
About 50 minutes.
How do you figure?
It
It's
is
11.
4:15 in Europe.
Okay. They'll go till 5
Yeah.
if there's something important
what
happening in the world.
I get what you're saying, but ultimately what it is when all the traders just, it's Friday, news is done, I'm done.
Okay.
Then it ignores market behavior, and that could happen any minute.
Here, I'll shed some light. Here's a pro tip. I think if you're looking at talking heads and stuff, if you go to Financial Juice, you'll see that they have a calendar that's on the left-hand bar of the screen. And it's so nice because it compiles all the other ones. So you don't have to look at a billion different calendars. They do a really good job of compiling everything into one spot, especially for talking heads, because it seems like they have all the talking heads and they mark them in blue, which is really kind of nice. So you'll see 11:15
On what? On where? Where do you go
Financial
to?
Juice.
Financial Juice.
Yeah. The bar that's on the left third of the screen, let's say. You can play with the settings, but I think they always show you the blue dots are speakers. And I think they show all of them as far as I can tell. So it's kind of nice to have that. So you don't have to jump between like FX Street and Daily FX and all the different wacky calendars just to see what's up. They do a good job of compiling the talking heads and marking them in blue.
That's good. Financial
nice.
Juice.
So there's daily is at 11:15, and then after that, it's just deeper into the afternoon. Europeans might hang around until the last World Economic Forum thing is.
Did you see how it's like these candles are just less than a pip or right around a pip? It's like, I don't know.
Yeah. So it's closed door
Not
meetings, so
worth it to
there's
trade.
Just little tidbits and things get reported on, but you don't know exactly what's going on.
Sure.
And they shy away from saying anything explosive because then it makes it seem like they're insider trading.
Hey, Eagle, I'm just going to comment to your comment. Well, I was already done trading before the news. You missed an opportunity to jump into a demo account to practice trading the news. So I 100% hands down. You already hit your goal. Get into a demo account and practice this, right? Because this is good practice, right? Unless you just are adamantly, nope, I don't trade the news.
Well, a lot of these platforms don't allow you to trade news too, so
That is true. That is true. But
taking a look at the fear and greed index, 72 out of 100 equaling greed. Crypto fear and greed index.
Eagle is still trying to get his feathers.
I don't know what a baby eagle is called.
I thought funding pips
is it
does
kid?
allow you to trade the news. They just don't allow you to. It's
That's eaglet.
well, I know Aqua does allow you to trade it.
Oh, funding pips does not. Well, they don't violate your account if you trade the news. It's just 2 minutes before, 2 minutes after you enter any
can't-
trades, they will remove your profits and you're done.
Got it.
And you just move on.
But they don't penalize you. They just don't give you credit. But they don't
Right.
remove your losses, do they?
They say, I don't know. That's a good.
If you
that's
place a
good
trade
point.
and take a loss, you get it. You earn that. You keep that loss. But if you make money, we're not going to let you keep it. That's shady.
It's bet against you.
That's funny. All right, because of this wickedness, it's probably going to pop down a little bit. I don't know. This is a time where you could play the market should do, and this is maybe a really good example of when it doesn't do what it should do. You can now you're trading in a 20% market. Right? So maybe we'll play that game for a second. What the market should do is it should cross this, right? It should come up here and test this. And if it crosses this, it could turn this whole thing into a W. right? Failure to cross this, and you could be looking at a M, but it should come up here and at least test that. That's what the market should do. Failure to do that means it's not going to do. So because we know that it's what the market should do, we can go ahead and put a secure right there, or just get out it on that. And I'll just probably just close out right there, because the reason why I close out right there is because this is the first time it's touched that. So anytime you see a first time as a level 2, it's such a great place to recycle, right? And close out, wait for the pullback, which is what we got. I just didn't execute it fast enough. It hit that the first time, close out, get back in on the pullback, because you can 2x your trades at that point, right? But now if it closes with the body, you need to wait for the pullback. The market should do this. Came here, touched that, goes up a little bit, comes back and tests this. This is your next entry right there. If it comes back and blows past it and closes lower, or all the way down to here, you need to put like 50% of your trades here, and then the other 50 here, and make your break even there. That's what the market should do. And if the market doesn't do that, then you could be like, okay, we're in market behavior that doesn't want to behave, right? We're in the 20%. And so that's why it's really important to start being able to predict where the market is going, so you can recognize the market has not done this multiple times. It should go here. It didn't. It should go here. It didn't. It should go here. It didn't. We're in a 20% market. Probably should just close out of my trades and
Are you
come back
taking
and
your
trade.
buys?
Yes.
Yeah,
Right,
go and
start
take your buy.
adding right there.
You're almost up to the 0 line again. So, and it was a short signal. So
there's the little pullback, and we'll see if we can get back in. Probably get back into a few more trades, and then I'll put more on right there to bring my break even down right there. And
did you
on
take
this
your buys
reach-
beforehand?
Oh yeah. This is the
Good, good.
second.
Okay.
Yeah. This is the second recycle. So you see how it's a reach right there. There's a big candle out of nowhere. So do we trust it? No, we don't. But we want to get our break even under the 50% of that blue candle for the pullback and get out. And we get continuation. If we see continuation and it blows past this, that'll make this 50%. And so we just wait for it to come down to here to get into any more trades. And you could add a couple here, because this is an action point right there. Probably add a couple here, right there. And here's what the market, there's two things the market can do right now. Come up to 50% of this candle, which is right where my break-even line is, and then have continuation. So if it stalls, I may just take that break-even out and be like, okay, I missed it, or I could get a bloop and hit goal and get out right there, right? So that's probably what I'm going to do, is take that, and you see how it came up, touched it, retreats. I'm hopefully going to get this a little bit of a bloop and get out for profit right there. I just don't trust. I just don't trust this candle. It was a big candle, so I smacked into it. I was heavier But it's heavier than I wanted to be. I didn't, I was still early game in my mind, but I didn't want to be, if we had continuation down to here, I would have been in mid game. Right. So if I didn't take these trades right there and it came back and felled the 50 and came back down to here, I would have took these guys into mid game. So for me, it's better just to take those, recycle, hit the, oh, stupid. I didn't hit goal. Josh isn't here though. He can't give me crap. So what do you guys think? Should we do it or not? I tell everybody not to do it. Consensus says what? Oh, he is here.
Of course. What's the worst that could happen?
I don't know. I don't know what the worst is can happen. What is the worst that could happen?
Haha.
I guess 5 hours is the worst that could happen.
Doll.
Hey, great session, guys. Gotta go.
Bada boom, bada bing.
Haha, you did it.
Put the mouse down and step away from the mouse. This is exactly what we talk about, right? It's like you get in, get out, and get done. And let's look at that really quick. So from the news, when we started trading the news, 25 bars, 25 minutes, right? To me, that's a normal trading session. I mean, on average, this is what I tell the hot seaters to do when I start trading with them. I try to get them to a place where they can hit 0.25% inside of 30 minutes or goal, whatever that is, inside of 30 minutes on average, right? Some days you can get that in 5 minutes. Some days it takes 5 hours, right? But on average, in normal market conditions, 0.25% in 30 minutes, get in, get out, get done, right? And again, going back to 0.25% a day in relationship to the road to 1 million is you don't stop at 0.25%, right? You secure at 0.25%, and then you take whatever the market's going to give you, right? Because some days you're going to hit 0.25%, some days you might hit 1% by letting it run, and so your average is probably going to be somewhere around 0.5% on average. However, I would make sure that whatever this 0.25% equals times 4. What I mean by that is that if you're copy trading, let's just make numbers easy, $100,000 account, and you have that times 4, well, that's $250 times 4, which is $1,000 roughly at 0.25%. If that moves the needle for you, which is $1,000 a day, you should be able to do that inside of 30 minutes.